Hello guys, welcome back to my channel. So today we will be discussing about peer-to-peer lending and how does it work. So let us understand the basic question, what is peer-to-peer lending? Peer-to-peer lending or P2P lending enables individuals to obtain loans directly from the individuals, cutting out the financial institutions as the middleman. And P2P lending is also known as social lending or crowd lending. Some of the examples or the platforms of P2P lending are the Money Club, Lendbox, etc. So let us see the about the P2P lending more in detail. So let us understand how peer-to-peer lending actually works. As the seen from the image, you can say that the P2P lending websites create a platform that connect the borrowers directly to the lenders. Initially, an investor opens an account with the site and deposits a sum of money to be dispersed in loans. And next, the loan applicant posts a financial profile in the website that is assigned a risk category that determines the interest rate the applicant will pay. The loan applicant can review the offers and accept one. Some applicants break their request into chunks and accept multiple offers. All the money transfers and payments are handled through the platform, and each website sets the rates and the terms that enables the transaction. Most sites have a wide range of interest rates based on the creditworthiness of the applicant. So you might be wondering if P2P lending is actually safe or not. So people who wish to lend money through P2P lending site need to consider the possibility that their borrowers will default on their loans just as conventional banks do. The research on P2P lending platforms has indicated that the defaults are much more common than those facing traditional financial institutions, sometimes in excess of 10.5%. P2P lending is riskier than a savings account or a certificate of deposit, but the interest rates are often much higher. This is because people who invest in a peer-to-peer lending site assume most of the risk, which is normally assumed by the banks or other financial institutions. RBI has set some guidelines for borrowing and lending. The minimum amount for lending is around rupees 500 to 750 rupees, and the maximum amount for lending is around 50 lakhs. In one-on-one lending, the amount lent by a single lender to a particular borrower or single borrower should not exceed 50,000 rupees, whereas for the maximum amount of for borrowing is around rupees 10 lakh. So let us see some of the advantages of peer-to-peer lending. So the first major advantage is high returns for the investors. So compared to the interest in the banks, the lender gets a higher interest rate. The second major advantage is risk diversification. Since the platform has found access, it lets the capital be spread across multiple loans, which enables it to diversify the risks. The third major advantage, it's quick and convenient. P2P lending platforms allows borrowers to apply for loans online and receive funds quickly, often within a few days. So let us see some of the disadvantages of P2P lending. So the major drawback in the P2P is limited borrowing amounts. P2P lending platforms may impose limits on the borrowing amounts, which can restrict the access of the borrowers to a larger or long-term loans. The second major drawback is the risk of credit. P2P lending platforms are generally the ones that have high credit risk, since the borrowers applied to these platforms have a low credit rating and it does not allow them to obtain traditional loans from the bank. The third major drawback is lack of liquidity. P2P loans are typically illiquid, which means that the investors may not be able to withdraw their funds or sell their loans easily or quickly.